In life, there is a yin and there is a yang. There is an up and there is a down. There's a left and there's a right. There is love and there is hate. There is Democratic and there's Republican. There's bullish and there is bearish. There is long and there is short. There is peace and there is fear. For a lot of things in life, there is a counterbalance. Some counterbalancing things are good. Some have a clear right and wrong side. In this video, I'm going to talk about fear, which is wrong for success in trading, and how you can control fear and change your fear you have in trading to a peace in your trading. We all have fear about stuff. It's good in some ways, it's healthy in some ways. We are given this ability, this emotion, to fear. Fear is there for a reason. For example, if a wild animal is running in your direction and it's breakfast time for that animal, you probably should be fearful. Fear can also get out of hand. It can be controlling. It can ruin our lives and our trading too. We hear a lot of fear about Facebook. We are fearful about failing. We are fearful about losing our amendment rights. We are fearful about losing our job. Our kids are fearful about their school and where they may be going to college next year. We're fearful about North Korea. We are fearful about too many guns. We are fearful about too little amount of guns. The thing is, fear can be controlled. It can be solved in most instances. For example, being a driver, I've been a driver now for nearly 15,000 days since my 17th birthday. Should I be fearful about my driving? And on the surface, not really. But if I drove without my glasses and drove at night, I would be more fearful about my driving. I can't see very well at night without my glasses. I would also be fearful if I started to text. So I choose not to drive without my glasses, and I choose not to drive and text at the same time. I solved a lot of my fears that I would have in driving. You see, fear is a function of risk. If you take too much risk, you should have more fear. If you define and limit your risk, so I drive with my glasses and I don't text and drive, I am doing the stuff that I would normally do when I drive, and I don't have that fear. If I'm on Facebook and I share everything and make loads of friends with complete strangers, and I take loads of surveys and I download a bunch of apps and I share a lot of articles and I mark where I have been every second of the day and what I'm eating and where I'm eating at, there might be a good reason for some fear about the amount of personal data that is being shared or used or manipulated from my Facebook account. I would be at risk. So to get around that, you adjust your account settings to the point that reduces your risk and your fear can go away. And maybe you share less things as well and make friends with less strangers. If there is nothing that would reduce the risk to the point of acceptance, then delete your Facebook account. Having too much fear is not good. Success in too much fear rarely works. It may work sometimes, but odds are that in the long run, if you are scared to death to drive, you will get in an accident. If you are too fearful, you are crowding out the chance to succeed. Fear is a function of risk, and success is a function of fear. So in the middle right here is fear, and on the extremes is risk and success. In trading, we need to take risk. I can tell you right now with 100% certainty that if you don't want to take risk, then don't trade. You have to be a risk taker. That is given. But the next thing to understand is that you can't let your fear crowd out your success for trading. So we as traders need to make sure our fear is not too great. So if we need to take risk and risk increases fear and too much fear crowds out success in trading, what can we do? Well, what we need to do is to define our risk. We need to limit our risk and then accept our risk. And if we do those three things, then fear disappears. We are in control. We have peace, the opposite of fear. Imagine having peace in your trading. Yes, it can happen to you, but you need to help yourself move away from fear to peace. You will notice I will often say in a post that the sellers are in control. Well, when I say that, I mean that the sellers have peace. The buyers have the fear. The buyers are not at peace. They are hoping and praying and fearing. The other day I was doing aim and shift, and he likes to start the day with a best trade of the day thread. So I put some ideas in myself. For one of the trades I wrote, the New Zealand CPI data comes out shortly. The New Zealand US dollar 200-hour moving average and 100-hour moving average come in fairly close together at 73.43 to 48. If that level holds on a rally after the number, it would be a good area to sell against. And then below the 73 level should be more bearish. Now, in those few sentences, I defined risk at the 73.43 to 48 level. I defined a target to get through at 7,300, which would turn it even more bearish. Of course, there was more to the trade than besides just those numbers. This is the hourly chart before the release of the CPI. Risk was great before the number, before that data. But after the data is out, the event risk is gone. The only risk is the market risk or the price risk at that time. The blue line represents the 100-hour moving average. That was at the 73.48 level. The green line represents the 200-hour moving average, and that was at the 73.43 level. Also dissecting in that area are two trend lines. One was a broken trend line, so it was the underside of the broken trend line. The other was a downward sloping trend line. So with all those technical levels in that area, it becomes a risk-defining area. Another way of saying that is, if the price stays below, it is more bearish. If the price moves above, it's more bullish. If the trade is to sell against that area on a rally, the risk is defined as long as the price stays below this area. Not only is risk defined, but it is also limited. If the price moves above that area and shows momentum, the bias turns from bearish below it to bullish. So you would sell here and get out here with a small loss. Risk is limited. Since trading involves taking risk, we know that, and fear is a function of risk. If you can define and limit your risk using 4 different technical levels in this narrow area, how much fear should you have? Not a lot of risk, and that equals not a lot of fear up here in your brain. And that is a mindset change that's going to lead to more success and more confidence in your trading. So the data came out and the price moved up to the 43 to 48 area. The price stalled and started to rotate back lower. And right here the 73 level was tested and then broken. And the price trended lower. We are now pushing the 100-day moving average near the 7,200 level. Success with little risk and little fear. That is the way to pattern your trading. It works in your trading and it works in your little fears in life as well. If you like this video, give it a thumbs up. If you did not like it, we are an equal opportunity voter here. So give it a thumbs down and let us know. If you want to put a comment, you are welcome to do that too. And feel free to subscribe to the Forexlive channel as well. There's a lot of good stuff there. My name is Michalowski. Good fortune with your trading. Bye-bye now.